Good morning, traders. It's 8:03 a.m. Chicago time, 9:03 Eastern U.S. time on Monday, the 23rd of January, 2017. Thanks for joining me yet again on another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight session did not bring in a lot of news. Trump says he will soon begin renegotiating NAFTA. Not sure what that's going to do. I'm sure that's affecting the peso, and it's likely to have some impact on trade, and it may set a precedent for other trade deals that the U.S. has with other countries. So look out for that. Just paying attention to whatever news comes out of this new administration. Other than that, there really isn't all that much to report. The markets are risk averse this morning. Capital is not flowing into equities. It is moving into the yen, gold, bund, the U.S. bond, the euro, and slightly the U.S. Treasury note. Treasury notes up 19 basis points in price, not in yield. And crude oil's up a dollar, almost a dollar, trading at 52.33. Strange. My crude oil's. Oh, I see. Yeah, my crude oil is quoting February again. No idea why. No, crude oil's down. Crude oil is down 52.45. I see there's a stray column here. Let's get rid of that. Sorry about that. So crude oil is trading March 2017. It's down 1.5%, 52.43. There have been comments out of Saudi and this morning, also from Russia's prime energy minister, stating that they're ahead of that Russia is ahead of the reduction quota um, by 100,000 barrels a day so far. Draghi released comments this morning saying that there's widespread instability in both Italy and globally. That was at about 5:30 Central, 6:30 Eastern. McDonald's reported $1.44 versus $1.41, 6.03 billion in revenue versus 5.98. And the ECB's Pratt reiterates view that monetary policy cannot address a systematic asymmetric shock. That was about a half hour ago. And that's really it as far as what we've got going forward. Since it's Monday, we'll go over today and the week. Today is very, very quiet. We don't have anything on deck this morning other than the Eurozone consumer confidence number at 10 Eastern. Tomorrow we get some numbers out of Germany, the Eurozone, and the UK between 3:30 and 4:30 a.m. Eastern. Then in the morning in the U.S. we get the U.S. manufacturing PMI at 9:45, existing home sales at 10, and Richmond Fed at 10 tomorrow. Speakers we only have Pratt at 11, and then Wednesday IFO business climate out of Germany and the FHFA housing price index at 9 a.m. in the U.S. Thursday is where things start to get heavy from the economic release front. 2 a.m. Germany GfK consumer confidence. Then we get some UK numbers, GDP index of services, and then the US releases a slew of numbers between 8:30 and 10 o'clock in the morning, including wholesale inventories, services PMI, new home sales, leading index. Friday also has some numbers in it. The U.S. releases U.S. core PCE, GDP annualized durable goods, and University of Michigan final. So the week is backloaded as far as releases are concerned. Anyway, grab a calendar and you'll have the same information. Here's what we did on. Here's what we expected on Friday. Now Friday was a 19-minute Trader Bite. I spent a fair amount of time going over how this big, let's go back here, how this big consolidation that you see here on your screen is compressing, and it's setting us up for a strong move, a potential strong move out of here. We've seen this over and over where the market gets really lazy and then we have a sudden move out. But we had Friday, we discussed Friday and Thursday, I think we discussed at length this combined profile. What I've done here is combined a traditional market profile back to the beginning of its consolidation to see where the volume is and where we've traded. And you can see that it's got a very sharp point that's called the high kurtosis. In statistics, all a market profile is a traditional statistical histogram that is turned vertically. We're basically measuring where the volume is taking place, in this case time, and we're picking up a mode, and we're picking up um, the first standard deviation, which we call the value area. That's represented by this green bracket right here. Oops, that green bracket shows you the first standard deviation or the value area. And then what I showed was on Friday how we tested down and we came right back into the high kurtosis area on Thursday. And then we moved forward and made our first hypothesis. And the hypothesis, for those of you who are here, are quite boring this past week. They've been the same all week: Monday, Tuesday, Wednesday, Thursday, Friday. Same hypotheses. If it tests slower at first, look for a base and then look for the rotation up to the next naked level, which was 22.70 and a quarter and 72.25. If it tests higher early, then look for a reversal against, again, 70 and a quarter, 72.25, a return to 65, and a potential push through to the downside, in this case, the overnight low at 22.60. That was the expectation or the hypotheses. This is what actually happened. Hypo 2, there it is, a push to that 22.72.50 area, 72.25 area through the naked point of control from the 13th. And then we have our reversal. There's the reversal. And then we finally get our first setup. We have an impulse back to mid. That's a clean classic setup there. And the expectation is that this low that was put in on the impulse is likely to be taken out, giving us a 5-point profit potential on this one with about a 3 or 2.5 point loss potential. The stop or exit area on the short would have to be outside of the prior day's range. The prior day's range, if the market's able to push through the prior day's range, then you start to clear this zipper here and it's likely to make new highs, and it didn't. And so we got this rotation. That was a very clean setup. The secondary clean setup is the test after the extension of the IB low, mid, which is this blue line, the teal line. The blue line is the mid, the teal line is VWAP, and what we had on this particular setup here is confluence of the IB low, the initial balance low, which is the first hour's low, in addition to the open of the session, in addition to the mid, all working together with the prior day's low volume node right here. This is another classic setup, and that was worth about 5 points as well, right here. And then the rest of the day was spent sideways, and guess where our point of control is? Yes, you got it, 65.75, right up against the 22.65 MC point of control. We are still, despite the higher high, higher low, higher point of control, we are still in balance. And then to top it off, the overnight session just simply extended, continued that balance overnight. So the overnight session and the current market's trading at 62.75, extended the low to 58, so we have a slightly lower low. And also on the weekly, we managed to make a lower high and a lower low on the weekly. So one-time framing on the weekly has stopped being upwards. Here's the overnight immediate on the open. The market drops, consolidates, does its continuation. There's a continuation trade. So there's the impulse down, continuation. And now it's sitting down here in the middle of the range, right below above the point of control, and unable to go anywhere. This puts us in a very odd position when we're trying to our goal is to look for an edge on the open. Um, the market overnight inventory is short in price. Here it is, and it's trying to come back. So yes, the prior session's close is up here at 66.50. It's trading 63 and a half, just 3 points below, and the delta is also negative this morning. So I'm expecting it to rotate back up as a first course of business as we open up. The reason for that is those who come in with a profit, those who are short and come in with a profit are likely to take something off, especially in a market that keeps bouncing up. Okay, let's take a quick look at the broader picture. Here's your weekly profile, okay? And like I talked about last week, all we're doing is we're forming a triangle. And we've been doing this for a long time. These are weekly profiles, day session only. The only time I'm talking about Globex prices or Globex levels is when I look at the overnight chart. The rest of my charts are all pit session only, because they're backed up by the constituents of the product, the S&P 500. And what we find here is we look at how the market traded, how much volume the market traded at each price. We see that we are simply just testing and retesting these areas. Oops. Testing and retesting these areas, and we're simply coming to a point. Very big belly on the prior week, and then last week we got more consolidation. The point I want to make here is there's a fair amount of energy that continues to build and build and build. This market is coiling, compressing, consolidating, and it's likely to make a big move on any news. The market essentially is saying uh, the information that we have, that on which we project earnings, we project the performance of the 500 stocks, says that these prices are fair prices, and that could change in an instant if something comes out that causes the market to revalue risk, in which case it would move down if risk is higher. And my point, I don't know when that's going to be or how that's going to be. Nobody does. But my point is to recognize that there's a lot of energy for when that happens. And so if it does happen, it's likely to be a 30-point day type of thing, given the amount of consolidation that we've seen here. So last week, actually, last week was an inside week. We had a lower high, higher low, which was an inside week before the last week. So the prior week before that was an inside week as well. Lower high, lower low, completely neutral, completely consolidating. And that's where we are. I mean, last week's range was something like 22 points. Last week's range went actually 20 and a half points. Last week's entire range for the whole week, 4 days of trading, went from 22.53 to 22.73.50. And then it closed at 22.66.50. We closed last week lower than the prior week. Our point of control moved lower to the prior week, and but the point of control is still in value. Remember, the green bracket here means value, and the point of control is inside of it. It is completely neutral. You would not want to commit to anything at the moment, in my opinion. Trades are light and tight, and you don't want to commit too long to any given trade. And in a parody, I put up that tweet about the the ES keeps going round and round and round and round, to parody that elementary school song back to 2265, and that's where we ended up. We ended up moving from when I said it, which was around 2262, back to 6650 where we closed, and here it is. the deep, more and more consolidation. You could see the volume is just really concentrated in this area. The MC point of control has shifted down from 2265 to 2264.50, and it's marked with your flex levels for those who have it. Okay. Anyway, so that's where we are. Well, guess what, folks? It's the same layup, same setup. The last few times it's worked hypo 2. Um, this time, hypo 1 will be the push up. Why? Because we are below. So I'm looking for an open auction. We're opening in range, in value, push up, attempt to push higher, uh, look for resistance, inability to rotate higher, turn around and test the other side, and then finish somewhere around the 65 area once again. Until that changes, I cannot expect anything else of the market. Okay, so hypo 1, test higher, look for resistance on the high side. Um, Clearly, I'm not going to sell an open drive. If the market opens and just shoots straight up, I'm not going to just stand in front of it just because I enjoy giving my account away. I'm looking for failure to push up. I'm looking for order flow indications in bookmap showing me that size is coming in and is absorbing the buying before I commit my own money. I'm not big enough to stand in the way of the market. I don't think anybody is. The secondary hypothesis is initiative down. Look for the test of this 59.60. Remember the 60 area, a poke through, and then consolidation, and then back up to 65, and an attempt to the other side. The range is expected to be around 10 points today, so I'm looking for about 2270 on the top side tops. That's the secondary hypothesis for today. Okay, so those are your two main trade ideas of the day. Again, as always, we don't just stick our nose in the market and expect one of those to work out. We're looking for any indication as to which is about to happen. So I just sit out for the first 15, 20 minutes and see who's participating and who's got strength, and then look for areas to lean against to go short or long, depending on which hypo. Last thing. Um, there's a webinar tomorrow, but it's not actually going to be a webinar. What I'm going to do is release a video, the video on order flow scalping, order flow market depth scalping, and all you have to do is join the mailing list to get it. The mailing list is linked in the description of this video. You could just add your information. You will not get spammed. Those people who attended the December webinar will automatically get it. If you're already a member of the website, you're going to get that video anyway. Okay, I'll leave you with that. Good luck, and I'll talk to you soon. Take care.